Hi, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. First, before I start, thanks to everyone who likes this video and all our subscribers. I appreciate your help with the YouTube algorithm, as this allows us to bring you more and better content. Second, after I look at the FANGs this week, I will talk further about our upcoming free webinar on January the 6th. So let's cut to the chase and take a look at the FANGs this week. Okay, the first one is Amazon, and this, by the way, is if I had a portfolio of FANG stocks, Amazon would be in that portfolio right now. Okay, remember a few weeks ago, just before the election, we had that little drop in the market, and I said if I could buy Amazon, I would. Well, it came almost to where I wanted to buy it, and I certainly would own that stock. Apple, of course, we had a buy on the stock when it fell originally to its old HB4. Of course, that has vanished now with the new balance sheet, but nonetheless, since we had not got a sell on the stock, it would remain in any portfolio that I own of FANGs. And thirdly, NVIDIA, the same issue. We had a buy in the stock some time ago. We never had a chance to actually sell it, and it's been going right along its HB4 price. That is 20 times book value. So that would be very clearly a hold. Facebook remains a kind of a conundrum. We had a very clear sell on the stock when it reached its bubble price, that 7.4 times book value, some while ago, and it never fell close enough to the mid-super growth price, that's 5.5 times book value, to actually get a buy. However, you will recall that when the stock got down fairly close there, and I was reviewing the FANGs, I said, well, if I had not sold the company, what would I do now? And I said, well, at this juncture, I probably would hold it. And so you can take that any way you like. Either we still have a sell still in effect, or if you want, I've got a hold on the stock right now. Now, Alphabet. This is getting interesting, isn't it? Remember that I showed you the longer term chart of Alphabet, and it had not broken above its mid-super growth price. That's 5.5 times book value for 10 years. Well, when it got back up there again, of course, I immediately put out a sell on the stock. But look at the stock. It's kind of hooked around now, and it kind of looks as if it's trying to break out. And of course, look at the fair market value. Okay, the trend there has speeded up a little bit. This is also the cheapest of all of the FANG stocks in price to book terms. So perhaps the market is wondering if this should be bought and maybe heading higher. But we'll have to stay tuned and wait, because it certainly has not given us a buy signal yet. Microsoft, well, you remember what I've been saying about this company. Sloppy trading. I prefer not to hold stocks that are sloppy traders, as they often tend to signal that they're going to lower prices. Remember last year we were looking at the stock breaking out, and of course it wouldn't, and then finally it did. We had a big move. Well, this year the trading is entirely different. It's not the kind of investment trading that I like to see. And of course the same thing goes for Netflix as well. And I have said to you for some time now, I am concerned about the company. This is the almost the paramount COVID-19 stock, and again, sloppy trading. If the concerns or if the fears about the COVID-19 pandemic are easing, as they appear to be, even though the pandemic is not easing, that is not a stock that I would want to own. So in summary, what I call my FANG portfolio, first and foremost, I would own Amazon, our buy on Monday, November the 2nd, although I still don't see any follow-through. If I was thinking of buying, it would be a time to be patient. But a reminder, okay, any setback to the HB3 must hold. Apple's my second holding. The last SVA signal was a buy signal. I'm not as comfortable, of course, owning this stock as when I bought it, but if I was looking to buy, I have no clear signal, and I would do nothing right now. And my third holding would be NVIDIA. It's holding right there at 20 times book. Facebook remains in limbo because I had to sell in the stock, and I still wouldn't own it. However, when in September it did set back, I observed if I owned it, I would not sell it at that point, so I would hold. Stocks that I would personally not own at the moment. Alphabet is one of them. However, I'm not sure why these shares are close to maybe breaking out over their mid-super growth price. That's 5.5 times book, which would be a new 10-year high, but I would buy if it did. This is actually the cheapest of the FANGs, and I will be watching this with very considerable interest. As I said before, Microsoft is a sloppy trader, and such actions often lead to lower prices. If I was thinking of even thinking of buying the stock, I would wait for a clean breakout over the HB2 price. Okay, that's 12 times book value. In other words, the traditional technician's breakout pullback, but it would have to hold. And Netflix, of course, that's the real COVID-19 stock, but of late all I've seen is sloppy trading. So right now I would not be owning the stock, and I would wait for a setback to the HB3 and then hope for a rebound. Now, over the past 2 weeks, I've been letting viewers know that we will be having a free introductory webinar on January the 6th for all FANG Friday viewers who want to learn about the science behind SVA and our charts and show you how they work. We've actually had tremendous feedback, as many of you have already signed up for the webinar. If you are considering attending and have not yet signed up, please comment your email in the comment section below this video to secure your spot, and make sure that you provide us with your full name. And I do mean secure your spot, because there are a limited number of spots. This is going to be on a first come, first serve sign up, and we're already almost half full. It'll be January the 6th, to remind you again, at 4 p.m., but please make sure that this fits into your calendar before you sign up. I will spend about a half an hour or so going over the science, and then I will look at some interesting stocks in our database using our chart similar to what you see during FANG Friday. These are stocks that will range anywhere from TD Bank to Tesla, following which there will be a short Q&A. Obviously, with a number of viewers, it cannot be personalized to your portfolio, as I do with all of our new SVA clients, of course, but it'll be every bit as detailed. Anyway, if you are interested, please put your email address in the comment section below, and we'll sign you up for it. Anyway, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools, as I trust we have been very clearly showing you. I will see you next week.